it, there's advantages to having a little extra mathematically, because if it goes down, you buy more, And again, if you're 100% long and it goes down, you do nothing, right? And so you fail to kind of get those dips. So there really is some advantage to having some cash, and so I don't think but it doesn't mean you have to have cash in fiat. You can have Tether, for example. You can have USDC if you don't trust Tether, but it's good to have some exposure to non-Bitcoin, because as we know, Bitcoin can go down for quite some time. And historically, it's been a couple years, but if you bought in at the peak of the market, you're just now getting back to your cost basis, and if November of 2021. Not a problem if you had sufficient cash on the side. You're great. I'm back to where I was. But if you were 100% bought in November of 2021, and then you had to start selling for living expenses in 2022, and 30%, and so the greater the probability that you have, of course, the greater percentage you should have. But it's never 100%, right? So some of the most interesting things you can get from actually studying, for however long, bachelor's, master's, PhD, whatever. But having studied math and stuff, you get these rules of thumb. And for example, there's even a rule for dating, and it's a fascinating result, which is, how many people should you date before marrying somebody? And that's actually a mathematical solution to that. And you can Google it. It's called the secretary problem, or the marriage problem. Okay. The secretary problem is like, it's a little bit it's a little bit old school, but that's what they call it. And basically, a secretary is presented a series of candidates. Each guy comes to her and says, "This is my net worth." So the first guy comes and says, "I'm worth $250,000," and she has to decide, either I marry him or I pass. And then the second guy comes and says, "I'm worth $300,000, marry, pass." And she gets to see, let's say she gets to see 100 people in her life, statistical behavior that we can estimate based on the past statistical behavior, which is not obvious just looking at Bitcoin, looking at the chart, trying to do technical analysis, which is generally garbage anyways. It just doesn't apply to Bitcoin. This is something very different, I think, than anything else that we've seen.
Sorry to jump in. This is super interesting, by the way. How are you planning to approach your, I suppose, DCA out? Like, this thing moves crazy volatile, and you said you have in mind to start selling some at some point.
So the Kelly criterion says, for tax reasons, since I'm not in Dubai, right? And the Kelly criterion is the bigger your rebalancing period, the more you're going to allocate to Bitcoin, right? So I'm very comfortable saying I'm not going to rebalance more than once a year, even if that, right? I haven't sold any Bitcoin for quite some time now, like you, right? But, let's say I rebound. 1990 is when I bought gold. And I bought gold at around $200, right? An ounce. Now it's $2,500, $2,600 an ounce. So I bought it at $200, $250 an ounce, right? So gold has gone up 10x. My gold has gone up 10x in the period that I bought it. And, one of the advantages of holding physical gold is it's tough to sell it. So it's not like Bitcoin where you're sort of tempted to click the button. When you have the physical gold, you're not going to sell it until you finally reach the point where you just have to sell it, or, So physical gold is okay. There's a lot of math behind the power law of Bitcoin versus gold. And Bitcoin is pretty much outperforming gold, and in the same way that it is outperforming fiat. The power law versus fiat is negative. It's you're wasting your time, and you're in the end you're going to have suboptimal returns, in my opinion. I'm not sort of massively against these things, but I just think that you're going to underperform Bitcoin because ultimately the reason I say that, let's just take the very long term, right? So what is Bitcoin really? The addressable market for Bitcoin is money, right? It's money and fixed income. So it's, it's all of bonds, it's all of money, M2 in the US, the same in Europe, the same in China, everywhere else, right? There is, $100 trillion plus $200 trillion worth of bonds and M2, right? 200 trillion. So we're at a couple percent of that right now. If you look at world assets, including real estate and everything else, there's like 900 trillion. So, Russians can trust Bitcoin and Americans can trust Bitcoin. We can all trust Bitcoin. Nobody can screw around with Bitcoin. And that's because Bitcoin is that neutral level, that, every country, even if they're at war with each other, they could still agree on Bitcoin. That really makes Bitcoin completely unique. It's going to become world money.
I don't even think they compete one another. I think it's like potatoes and rocks, or grapes and whatever, bananas. I mean, technically grapes and bananas are fruit. It's something completely different, right?
I think if you're talking about deploying real money, not like, just gambling little money. If you're just gambling, you want to have fun, go to the gambling table or go buy some meme coin, do whatever have fun. You know what I mean? And maybe it goes up, maybe it goes down. And you're in it for a short period. You're going to gamble. You're going to get out. Fine. But longer term for investors pretty quickly. And also, our investment capabilities are overrated as well. We're not that great traders. In fact, we're terrible traders, generally speaking. And we should try to recognize that and trade the least possible. But it's hard. It's hard to have that temperament where you don't want to just go, okay, it's 62,000. I got to sell. It's like, well, it's up 50% year to date. Like, what do you have? What's your complaint? There's no complaint. So
the holding part, it's so damn complicated because in the art of no action, it requires a strong action, right? And like you said, why would I care in buying at 58, selling at 49 when I know that in 10 years we're going to a million? It doesn't make sense in my head either. And having a delay gratification is something these days next to impossible to find. Everything is so fast. Even emails are down to a degree too slow, and people don't
well,
use
listen,
them.
I feel the same way about drinking, right? So I stopped, 10 years ago I drank, and average out the log of Bitcoin price over 4 years. Do a simple moving average of the log of Bitcoin price. Okay. And if you look at that number, it is an absolute straight line measured in log-based terms. So the average of the logs is a complete straight line with 99% R squared. So you look at this Bitcoin behavior, which I described as well, that goes up, it goes down, it crashes, it waits for 4 years, it's dead, oh, it comes back. Now you look at it, you average it out over a 4-year period, you look at it in log space, and you get a straight line completely around the straight line with 99% R squared. Like you would say, to a normal person, you would say, who understands, had one statistics course, and you'd say, that's not possible. How can an asset have this kind of very deterministic price behavior? And the reason it is that Bitcoin, the story of Bitcoin is a very simple story that once somebody gets it, they like it. And the story is very simple. You can take your money. There are rich people in the US, there are poor people in the US. So it's sort of a weighted number of people who adopt it. that adoption is growing more or less like a virus. And we just went through COVID, so we know what a viral growth is like, right? This is a little slower growing virus because you have to figure out self custody, you have to figure out ETFs, you have to figure out what Bitcoin is, you have to get over the fear of this new thing. But once you get over it, once you do it, you start telling somebody else. Yeah, and it becomes, it becomes a viral, right? And that's what comes in, right? And I was actually just talking to a guy yesterday who was from Egypt, and his family happened to buy Bitcoin right before the Arab Spring. And, they did well, right around very early in the I think 2011 or something like that. And $1 million a coin, I don't care. It's sort of irrelevant, I think if you're a young person, people are like, I missed the boat. No, you didn't miss the boat at all. You're in year 15 of a major revolution. You know what I mean? Like, yeah, imagine being in year 15 of the internet, okay. You missed the boat on the internet? No, you missed the boat, so like, I think we're very early. I think we're going to go really higher. I think it will totally it'll become the standard, and it'll become so much that people will think it's odd that people use these currencies like the dollar. I think we're going to get to that point, but but how we get there, I don't know. I don't, it's like, do we get there in an easy way? Do we get there with, collapse, strikes, World War III? I don't know.